In today's weekly Forex forecast, we are discussing the DXY, the EURUSD, the Pound USD, the Dollar Yen, and also the Australian Dollar for the week ending October 11th, 2024. So if you guys have seen recent videos with regard to the DXY, then you know about 102.60. This is the area up here that I have been discussing now for the past couple of weeks. In fact, ever since the market broke down back here and started to consolidate down here in this area, I was looking for a potential retest up here at 102, followed by 102.60. So this is what we talked about last weekend, the fact that the DXY had started to get squeezed down here into this falling wedge. So anytime you see a pattern like this, typically it means that a short squeeze is coming, and that's certainly what we got this week with this very aggressive move higher. Now, furthermore, the reason I was looking for 102.60 is the fact that this is the bottom of this channel that goes back to 2023. So off of these highs up here, we've got these lows, and you can see where the market did break down from this back here in August. So we got the breakdown, consolidation, short squeeze here this week up there toward 102.60. So where are we likely to go here for the DXY next week? And this really comes down to what happens between 102.60 and 102. So right now we have the DXY trading above these previous range highs back here, however, still below the bottom of that channel that we just looked at. Okay, so 102.60 is going to be resistance, 102 or thereabouts is going to be support. Now, a lot of people would look at this and say, okay, well, with the market trading here below 102.60, I'm going to start looking for US dollar shorts. And I could be wrong, but I think that that might be a mistake here because we have seen a very aggressive rally from this market. Furthermore, it's closing above these highs back here. So we have right now the first higher high from the DXY here going all the way back to this trend right back here. Okay, so since this time, if you'll notice, the DXY has put in lower high after lower high. Okay, so this is the first time that we are seeing the DXY put in a higher high since all the way back here when the trend changed back here in April and May. So right now, guys, it does kind of look like the DXY is trying to put in a bottom. Okay, now the key to this, though, is that you also don't want to go buying the DXY, the US dollar, below 102.60. So this right now is not where you want to buy the US dollar, in my opinion. You need to wait for at least a daily close, preferably a few daily closes up here in this area, to reestablish itself back here within this channel. If that occurs, then this down here becomes a fake out, failed breakout, or breakdown, and we get the DXY moving higher up there toward levels like 104, 104.50, etc. So right now, guys, it's kind of indecisive, as far as where we go. But again, I don't like the idea of trying to look for shorts here on the USD, just given the fact that it is trading above those previous range highs. We also have that first higher high this week, since going all the way back there to April and May. And furthermore, when we look at the euro and the pound, we are seeing those pairs starting to break down, which we'll look at next. Okay, so most likely a pullback, some type of pullback here from the DXY next week. However, again, I don't really love the idea of looking for dollar shorts. The only way, in my opinion, I'll just say this one last thing before we move on. The only way that this becomes a short, in my opinion, is if we see the DXY closing next week, okay, a day next week below 102. If next week we see a day close down here in this area, then I think this becomes a short down there toward levels like 101. But as long as the market is above 102, we're looking at a range-bound market between these two levels. And again, we have that first higher high, so you do have to be careful looking for US dollar weakness. All right, so following up what we just looked at here on the DXY, we've got the EURUSD, which is essentially the inverse of the US dollar index. Now, what we've talked about here recently over the past few weeks is that, first of all, you can see where we've got this channel off of these highs from back here. And it's not perfect. However, you can see that we've got highs like this here. And depending on how you draw this upper level, it does extend across some of these highs. Now, you can notice up here that this was a fake out above the top of this channel. Furthermore, we had a fake out above that late 2023 high. So we've talked about all this on this channel. And you can see where we did get a range-bound market here for a few months and then the breakdown. So what we were talking about here recently, including last week's video, was this closed below 111.10. This right here opened up 110. Now, what I said in that video is that I was looking for a sweep of this low back here, which we certainly got on Friday. So the key for the EURUSD, if we look at this here on the daily chart, is the fact that, this trend line down here off of these lows, right now you can see where the market is trading right at that level. And this is why, just like with the DXY, like I said, I don't like looking for US dollar strength and euro weakness to start next week, because I think that right now with the euro trading right here at this level, I think you've got to be really careful if you're looking for weakness here, just because we've seen this already from the euro. Furthermore, we've got it trading right there at support. Also, the DXY is still below 102.60. So what I think this is going to come down to for next week is, do we get a sustained break below this level here? Okay, so anytime next week, if we get a daily close down here in this area, then it puts this back to resistance, and we're looking at a move lower towards some of these key levels, potentially lows like this down here. And alternatively, if the Euro USD can hold on to this area here on Friday and close above levels like 110, okay, next week on the daily chart, then that would flip this back to support. And we're looking at a move back here toward areas like 111.10. Now, keep in mind, though, that given what we're seeing here today to end the week, if we see the Euro USD test levels like this next week, okay, so 110 is going to flip back to resistance. So if next week we see the market bounce from here, come back here, test 110, and then sell off and close down here, that is going to be bearish, guys. Again, 110 is now the level that bulls have to get back above. They have to get back above this on the daily chart to turn the Euro USD bullish again. Until that time, guys, this does look pretty dicey. Along with the pound and also the DXY does look relatively bullish. But like I said, US dollar bulls have more work to do next week. So next up, we have the pound here, which we talked about last week in a video. And what I mentioned there was this area around 130-140. So as you can see, we did get a move down here into this area on Friday. And Thursday closed just below it. Friday looks like it's going to close just below it as well. So this is a little bit too close to call for me right now. Again, with the DXY below 102.60, I really need to see the US dollar index above that mark on the daily time frame to start really getting bearish on things like the pound. Now, if this does turn into a fake out, okay, so if the pound closes, down here in this area and early next week, we see price action that confirms this with the market moving lower below levels like 130.90, then we could see a move down here towards some of these lows. Because like I mentioned last week, if this turns into a failed breakout with the pound holding below levels like 130-140, then typically when you get something like this, the top side of a pattern like this, you do get an extended move in the opposite direction, which would be lower toward these lows and potentially the bottom of this channel. Now, alternatively, if we see this market hold above levels like 130-140 next week, all right, so on the daily chart, this is very messy. This is something that I don't recommend trading until we get some type of confirmation here. But if we were to see the market, reclaiming levels like this, then we could get that move back toward 132.50. However, like I said last week, though, in the video, is that right now with the pound, even if the market holds on to this area up here, you've still got to deal with this area around 132.50. So you've got a trend line through here. And more importantly, you have these highs back here that the market has now lost. So you can see where it served as support back here on these candles, and then it failed there on Thursday. So even if the pound does rally early next week, 132.50 is going to be resistance. Okay, so still a very range-bound market. However, it is starting to look relatively weak with it losing that 132.50 area. All right, so another range-bound market here is the dollar yen, which we've talked about over the last couple of weekly forecasts. And what I mentioned back here on this candle on September 25th was the fact that the market was closing back above this area through here. So this candle right here reclaimed that level. And what I said then was that this imbalance back here from this candle was likely going to serve as a target right around 146 to 146.50, which we certainly got the very next day. Now, this Friday candle closed back down here, okay, down here, above 141.80. So if you saw last week's forecast, what I said there was to expect range-bound price action this week through here. And we certainly got that. In fact, if you go back and watch that video, I said early last week, okay, to expect range-bound price action between these two levels, which we got 141.80 all the way up toward 144. So that also played out nicely. And now, just like I mentioned with the DXY, we do have this market starting to put in a higher high. So if you'll notice here, even though this market is still very sideways, we have the dollar yen starting to give us a little bit of strength here within this range, because what you'll notice here is that within this range, we've got these highs back here, even this high here. And what you'll notice is that now we have potentially, okay, the first higher high. Now, if the dollar yen can hold above levels like 146.50 next week, all right, this is going to flip to support. If we see this hold, then we could get that move back here toward levels like 151 to 152. So that's going to be a critical factor for the dollar yen. And furthermore, if we move out here, this is a trend line that goes back years for the dollar yen that is going to be absolutely critical here for this market over the coming weeks. So notice this level goes back to 2022, and it is going to be imperative to see the dollar yen climb back above this in order for it to turn bullish again. Until that time, this area up here around 151 to 152 is going to be resistance. Okay, so again, if we look at this here on the weekly, I think it becomes really clear for what we're potentially looking for next week. All right, so you've got this level down here. So notice all these lows back here, these highs, this low through here, and all these weekly closing prices. So this is a very critical level here for bulls next week, 146.50, that they have to hold above. So if the market comes down here, I would expect demand from this area. And from there, we could finally see a retest up here at 151 to 152. So that's my base case for next week, move up here. But first, maybe that retest of 146.50. Of course, if we see the daily and weekly chart start to lose this area, then this up here turns into a failed breakout, and we're looking at a move back there toward levels like 144. All right, so last up, we have the Australian dollar, guys, which is also setting up potentially for a move lower next week with some US dollar strength that we saw last week. Now, if you look here at the Australian dollar, you can see where it did sweep these highs from back here. All right, so on the weekly chart, we've got these highs back here. The market swept this area, and so far this area has failed. Now, furthermore, this is a trend line back here that we've talked about now for months. And in fact, this is what allowed us in the VIP area to get short here on this buy side fake out back here. So you can see close back below. We got a nice trend here toward the range lows and even further. So this right now, with the market once again losing that high from late 2023 and also closing back below this trend line here. All right, this once again gives us a buy side fake out that could send the market lower toward levels like 67, 50, and potentially even lower. Okay. So right now for the Australian dollar, this area up here is going to flip to resistance next week. Again, for this to really start moving lower though, we need to see the DXY getting above 102.60. That's going to be critical for all these markets that we've talked about today. But with this close again, guys, this area up here is going to flip to resistance. All right, so this area right around 68.40 or so, down toward about 68.30. That's going to be resistance here for the Australian dollar. And we've got support coming in down here at this little pivot through here, right around 67.50, and also pockets like this down here around 67. Okay, so this is what I'm looking for next week, potentially a move up here to retest this area. So through here, right, retest this area through here, and then we get that move lower down here toward some of these key support levels. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. See the link in the description for 90% off lifetime access, or if you're on the website, click on that join VIP link. Have a great weekend, and I will talk to you again next week.